All right, another sign of a speedy housing recovery amid the coronavirus pandemic. New home sales out this morning. We see they jumped 16.6% in May to a seasonally adjusted annual rate of 676,000. Joining us now to discuss the housing market is Cortland's chief economist, Brad Dillman. We also have Yahoo Finance's Inez Ferre with us. Good morning, Brad. Thanks for being with us. Just what is your big takeaway from that report we saw this morning?
Well, obviously a good report at face value, well above expectations. The consensus had been for about 630,000 new home sales on a seasonally adjusted annualized basis. And as you said, this came in much higher than that. The real story really is in the April numbers, which were revised down quite sharply down to 580,000 on a seasonally adjusted annualized basis. So a good print. It was well above expectations, but we can see that kind of the badness was moved back a month a bit. So I guess a lot of these folks who are buying these Pelotons will be enjoying their ride in a nice new house, it looks like.
Yeah, it certainly looks like that, Brad. Mortgage rates, they've recently hit all-time lows. How much lower do you think they have to go?
Well, that's always the tough question about predicting mortgage rates. I think that they don't have tremendously lower to go as it is right now. It's really going to depend on what happens with the election and inflation expectations and what happens with the 10-year result. I think that that's going to determine much more about mortgage rates. We will see what happens as these mortgage rates get baked more and more into prevailing prices, right? So mortgage rates are great when they first come down, but when they stay down for a bit and it gets baked into pricing, their marginal effect is a lot less. So we'll have to see what the effect is going to be when that burns off as well.
Brad, Inez here. Lennar Management recently had some encouraging comments saying that they're seeing an influx of buyers, people wanting to get out of densely populated areas, also taking advantage of those low mortgage rates. Are people seeking homes that are new homes? Are they also looking at existing homes?
Well, the existing home sales print, which came out yesterday, was not particularly good. Obviously, the existing home sales had gone down quite markedly. I think we're also seeing the effect of mortgage moratoria. So, in the past, in a situation, in a recessionary situation, we might have seen an increase in foreclosures. And while we have an increase in delinquencies, we're not seeing that translate to foreclosures. So it would have been a resetting of market prices down to the underlying economic conditions is not really happening. And so I think we are going to see this demand channeled towards new housing, be it rented or owned. And as it was alluded to in the NAR report, to the suburbs. Now, to be sure, this was a trend that was already underway. We know from a few years ago, examining county level data, that you could see population growth in suburban and exurban and rural areas disproportionately taking wind. But I think what we're starting to see now is that it's turning into home purchases and not just for rent in the suburbs.
Brad, we have this environment where we have low mortgage rates, limited supply. There was a Reuters poll out recently that showed housing prices are actually outpacing consumer prices during this pandemic. So do you think that this is actually a seller's market right now and perhaps in the years to come, in the foreseeable near-term future?
Maybe in the near-term future, I wouldn't go that far just yet. Obviously, the existing home sales numbers have not been great, and the months of supply has actually ticked up as a result of just the decline in the transaction volume. Maybe we'll get there at some point, but I think that is a good point again about just talking about just how effective low mortgage rates are once they are, have been baked into the system. There's no doubt that kind of affordability is what is contributing to these increases in home prices right now. But when they cease to go lower or they tick up, we'll start to see an affordability crunch again.
Brad, who's buying a home? We have double-digit unemployment in this country. Who is going out there and plunking down 20% on a home?
Well, there actually had been, according to the NAR report, an uptick in all cash purchases. It wasn't a lot, but it was definitely an uptick there. They had also continued to report, I think it was about 32% of first-time home buyers. So that's happening as well. And as we do know, not everybody's going out putting down 20% in many parts of the country. You can still get away with, a 5 or 10%. And as people migrate to affordability, which is something they had been doing over the last 5 years or more, obviously their money can go a bit further. Now, with what's happening in the labor market, that's going to be really interesting to see how that translates to inter-MSA migration. There may be people, of course, moving out of New York to achieve, affordability or safety from COVID-19, but we don't really know how long that's really going to continue if the labor market's not really there to support it. Obviously, if people can work remotely, that's a little bit different, but typically we see inter-MSA migration as a result of a very positive employment environment, which, as we all know, is not the case at the moment.
And if people do move out of places like New York, wouldn't prices in New York finally come down a bit.
Yes, exactly. And I think we're starting to see the beginnings of that. I work with a colleague who's in Manhattan on our capital markets side, and he just got, without asking, a 15% rent reduction. So all of a sudden, you're starting to see a situation where prices may adjust in these expensive areas, and it may actually be worth living in those areas again for the first time, in my opinion, in about a decade. That's, of course, an arbitrary assessment just related to myself. But yes, we may see prices start to come down or rents cool in those areas, and they may become attractive again.
Inez is getting ready to go shopping. Take new home.
I sure am. New York's too expensive.
Brad, housing, of course, was at the epicenter of the financial crisis we had in 2008 and 9. But do you think this time around, housing is actually going to be one of the things that helps us come out of this pandemic and will be one of the bright spots when all is said and done?
I would put my money on that side of the equation. In the Great Recession, we had an oversupply of housing on the order of about 3 million units, according to my estimate. Today, myself, Freddie Mac, a number of other groups and individuals have estimates that the U.S. is physically undersupplied when it comes to the number of housing units. And so because of that, I don't think we're going to see the kind of pressures that we did 13 years ago when housing was massively oversupplied and there was all the issues that were going on in mortgage finance at the time. So it could actually be a bright spot on the way out of this. And arguably what we've just seen on the new home sales side is an indicator of that. Another indicator of that is what we at Cortland are seeing on the operational side and the multifamily industry generally, that fears of massive disruption as a result of the pandemic has simply not materialized. There was a hiccup in April, but if you look at collection rates, if you look at a lot of other metrics, they're not really indistinguishable from the pre-COVID time period. Now, that doesn't mean the expectations aren't going to be for a little bit more weakening as a result of kind of an echo effect of what's happened in labor markets, but suffice it to say, it's been better than expectations so far, and therefore an indication that housing may be the bright spot coming out of this.
All right, we're going to leave it there on that up note. Brad Dillman, Chief Economist at Cortland, thanks so much.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.